everyone. Welcome to a new episode of One Vision. This is Theo, your host for the episode. Joining us today, two fellow authors, Erin Taylor and Anette Broløs, who recently released their first book, Customer-Centric Innovation in Finance, with Kogan Page. Welcome to the show, ladies.
Thanks, Theodora. Nice to be here.
Thank you both. Thank you both. And Anette, is so good to meet you again after being introduced at the recent Finovate Europe. We have our good friends to thank for. And I know that you and Erin both met quite a while ago in a conference. So before we start, can you tell us a little bit about your company, Finthropology?
Absolutely. More than happy to tell you about that. You're right. Anette and I met at a conference in Amsterdam. I think it was about 5 or 6 years ago. It could be more by now. I'm not quite sure. And when we met, we realized straight away that we have a common interest in the need to understand customers better, particularly in terms of how financial services are changing and how people are changing financial services. So we started working together on a research series on financial products designed specifically for women. And at some point on this journey, about 3 years ago or so, we decided that actually it would make perfect sense to start a company focusing specifically on this issue of how to better understand customers. And that company is called Finthropology, which brings together the finance aspect, which Anette is more of an expert in, with anthropology, because I'm a trained anthropologist. And so the general idea is that we actually look into what customers are really doing in the course of their everyday lived lives, rather than simply looking at numbers in a data set or, doing surveys or something like that. And Finthropology is unique because, as far as we know, it is the only company in the world that specializes in understanding those human aspects of finance in terms of people's lived realities. And we work on these issues with companies, NGOs, government organizations and universities. And we do this research in place, in country, in both the global north and the global south. So we've done research in places like the Philippines, Brazil, Laos, Cambodia, also Switzerland and the USA and the Netherlands, for example.
I think you might actually be the first anthropologist that we have on the show. This is absolutely fascinating, because anthropologist was one of the things I wanted to study in university. Of course, I didn't end up doing that. I ended up in engineering, but human behavior and how they behave and how they react in different circumstances fascinates me. And I love what you just said about it's not always about data, but there's human aspects of finance that we need to think about. Now, let's go to the book a little bit, because you two argued in the book that when faced with complex questions that don't readily lend themselves to quantitative analysis, qualitative methods can help to fill the gaps. So it goes back to numbers and behavior. What are some of the examples that you can share with our audience in that aspect? And where can the qualitative studies part contribute the most?
Sure. So the general point here is that actually, when you think about it, I seem to assume these days that everything is known about us, everything is recorded in quantitative data somewhere. That's actually not true. So I can give you a great example to cut to the chase. We did a study of payments in Brazil a couple of years ago, and that was with a view of informing a company that wanted to develop a central bank digital currency. And so what they wanted to know is, if we make this digital currency, will people use it? Do they need it? How will they use it? What might happen in the future if this thing exists? So how do you find that out? You can't really just go to one data set and find out all the information. First, because the information you want might be spread out across many different data sets. And second, because not everything people do that matters is actually recorded anywhere. So we went to Brazil and we did research in 2 different sites to do interviews, to do something called a portable kit study, where we asked people to show us the contents of their bags and phones so we can ask them about their financial behaviours better. And we also did observations in the street, in markets and other public places, to watch what people did with money, watch what people did with their phones. And in that way, we were able to gather information about the broader context of people's lives, how they might choose to pay in one location and why they might choose to pay differently in another, and so on and so forth. And so by doing that research face to face with people and actually watching what they do, rather than just listening to what they say they do, you get a much richer sense of people's real behaviors in a proper context. And then you can start to extrapolate, okay, well, based on what we've seen, this is what we think people might do in the future.
And I could add perhaps a bit to that, because to cut that very short, that means that the qualitative studies helps us understand why people do what they do and how they do it. And what we all know and all have experienced, I think, is that when you're interviewed or participate in a survey, you will look to give the right answer rather perhaps than give the really true answer of what you're doing. And an example could be that we interviewed women in Switzerland about their payment habits, and many of them would say at the first sight, well, I prefer to use my phone because it's easy and I only have to carry that. And when we then asked them about their shopping experiences, they would say, but in the shop, I usually use my credit card for the points, and sometimes the internet connection is so slow that I can't make my phone work. So in reality, they were using a different payment method than they actually told us from the start. And another important issue here is that you may sometimes in your quantitative data catch the one-on-one information in a transaction. And we have seen many examples of people actually making decisions in a community like family or a broader community. So in the global south, we have seen many examples of people sharing an account or sharing a credit card to make the most of points and loyalty schemes. And even in well-educated and well-developed countries, you might still catch that as it's a husband or a male contacting the bank to do investments or sign up for a mortgage. But in reality, he may have talked this through with his wife, and she may actually have been the person making the decision behind it. And all that gets lost if you only look at the quantitative transactions.
I like what you just said, the last point, and that example literally spelled it out very clearly. It reminds me of how often we see studies that people say, oh, I will switch my bank if they offer these XYZ features. And we know that most of the time they don't. I will be the first one to tell you, yes, I would have loved my bank to give me the ability to, for example, deposit my check remotely with my business account. And if someone else offers it, I still won't switch my bank, because the act of having to switch all of your transactions amongst multiple different accounts is just brutal. So even though people say, oh yeah, I will do XYZ, in reality, given everything that's in context, you probably won't. So like you said, a lot of the things is lost in details. It's fascinating. Why don't I hear more people do what you guys do? Maybe that's a rhetorical question. That's what makes you two very special and different. Let's switch gear a little bit. When oftentimes we talk about money is something that's very, very personal. It's not just, here's $10, $1,000. It's not just about digits and numbers. It's something that means something to us. It's very personal because it's a means towards the end, if you will. Now, as the world becomes more and more digital, such as the three of us are meeting over the internet instead of having a face-to-face conversation, how should financial institutions evolve to meet the changing needs of customers? We changed the way we work. We've changed the way we get together with communities. So wouldn't the way that we move money will change? And if that's so, how should financial institutions evolve? Because, for example, in the book, you have mentioned that people used to trust authorities and institutions and things that are face to face. Like you and I met over coffee at an event in London, and I see you, I trust you, and I see who wrote the forward for you. But now, is it true that some people might actually trust internet-based solutions more than something that's offered face-to-face? That's a lot of questions in one. But
I think you're absolutely right. There's a broad change happening, and this is a change that affects consumers' behaviors and businesses' behavior. It's also a change that affects the way that financial service providers are offering their solutions and how they're partnering with other organizations to offer their solutions. And it might in turn change the whole infrastructure and the financial intermediation structure. But this is not a discussion for right now. And I think that we could write the next book about trust, because that's a very last subject and we only touch upon it in the book. But what we are trying to say is that we know that some studies say that people used to trust authorities, institutions, and face-to-face meetings and advisory services. And that was perhaps very logical when communities were small and there was a local branch and you knew your bank manager and you felt you trusted the person and you knew the person behind. Indeed, when you look at measurements today of trust in banking, for instance, you will still see that many people trust their banker, their advisor, their personal contact, but they distrust very broadly the whole industry, saying that banks as such are greedy and that fintechs or other institutions should overtake their position. So that's one thing. And then I think another thing is that many young people very digitally savvy, and we feel what the studies say about these young people is that they trust in values, they trust in brands, and they may build digital communities which they trust more than their face-to-face communities. And then I think that is just as far as we go, but a fascinating area to dive deeper into.
It is fascinating because I have two children. I remember last year when Apple came out with the savings account. I got so excited and I opened the account right away on that first day. And my son asked me what I was doing. I told him, I said, hey, Apple has a bank account, watch. And we were able to set up the account really quickly. I told him about the interest rate, which at that time was way higher than what most banks offer, still does. And he asked me just reactively really quick. He's like, then why would anyone still stay with the bank? And he's absolutely right. Because if you look at banking services as a means for you to move money, pay bills, save for the future, as long as you have those, and it's with something that we use all the time because we're a big Apple family, then why would you even go with someone else? Because it's right there and it helps and it serves the purpose of what you need and is a brand that you quote unquote trust because you use it all the time. So it is a fascinating experiment, if you will. I'm using my kids and see, what would the future hold? I learned so much from them, from, their behavior, how they interact with people online and how they view brands. For them, it's not so much so, well, I dislike banks, but it's more so, this is a brand that I know and it does what I need. So for me, it doesn't really matter if they're a bank or they're not a bank. So if we move from that and we look at financial inclusion as an overarching theme, oftentimes we start with talking about access to services. I can open an account, that's an access. And boom, the story ends there. But we all know that having access to services doesn't automatically mean that people can use it because they can afford it or they have access to it from an internet infrastructure perspective, or it doesn't automatically imply that those services are what meets their needs. So what are some of the things that we should be thinking about that go beyond access, and how can we as an industry do better?
Yes, well, I think needs is the key word there. I think the first thing we need to do is, what do people need? The second thing is, what do people actually want that will be functional? When we did the research in Brazil, we decided in the end that Brazilians didn't necessarily need a CBDC, but if they had one and it had a functionality that was different to the other things they had, then they would definitely find ways to use it because they're so savvy with different kinds of financial tools. But stepping back from these kinds of technological solutions, I think it's worth pointing out something that people forget often, which is that not so long ago, access to cash was financial inclusion. That was inclusion. That's the first way people were included in domestic economies. People have always had financial tools, but it was cash that brought people into their own domestic economy. And this was brought home to me recently when I was doing some research in Laos with colleagues from Western Sydney University. Our interviewees were in rural areas. They were farmers and they were telling us about it. They remembered a time before there was cash in their town and people exchanged labour and so on and so forth. And all of a sudden there was cash and there were shops and you could buy things. So that was, to them, financial inclusion. So it's very much worth remembering that not all solutions need to be technological. They don't need to be high tech in order to meet people's needs. And it's also useful to remember that often technology doesn't work very well, or at least not all the time. And that's especially a problem in the global south, where you have problems with insufficient infrastructure or infrastructure that breaks down. Bugs in software can be a problem. Things like ATMs being locked in a building overnight, so you can't even get the cash that you want, stuff like this. So technology doesn't always work. And usually when you have issues with financial inclusion, it's not because people are illiterate in some way, it's because the services just aren't good enough. So when we're designing for financial inclusion, we need to remember these aspects that actually, in fact, we need to design for, again, of course, the context we're building for, and not just assume that everybody's kind of a homogenous mass with all the same needs and the same accessibilities.
Can we say it louder for those in the back? Because my goodness, it makes so much sense. And in a lot of ways, that's how I look at, for example, what the world is doing with AI and how we get so excited about it. We often talk about how AI as a technology is going to bring forth a lot of changes and innovation that will benefit humanity, that bring people together and better. And to which I often ask, but the premise of that is that it is accessible and available to people everywhere. And that's unfortunately not the case. As a technology, it doesn't always have input from civilizations and cultures from the global south. It's not included in the LLMs that they have. People in a lot of places don't have access to the technology for some of the things that you were just talking about. Tech doesn't always work. So when we are in the business of innovation, I truly do believe what you just said is very, very true. And we need to keep that in mind. So with that being said, I do want to ask you, and I think it's funny when you were talking about access to cash, because I still do cash with the kids. That's the one way that I get them to understand. If you look inside your wallet and there's no more bills left, that means that you run out of money. It's easier than trying to teach them, please look at this app and don't overspend. So as we're looking at services being digital, becoming available across borders, at the same time, many people still stick to what you guys called local solutions and the traditional banks. What do you see in your crystal ball for not just the rest of this year in 2024, but also in the near future? What would we look forward to?
I can make a start and Erin can continue perhaps. I think that when we look at, you make a very good point when you talk about cultures, because what we see is people are used to trusting what they know and what they know works in their area. So the first people to use cross-border offers and non-local solutions are those looking for something because they're actually themselves moving across the world. So the freelancers, the small businesses working across the world and wanting a solution that will help them across the countries where they're working, and not only in their native country. But when we look at what the financial institution would do, I think that at a very pragmatic level, we would very much like to see financial providers consider the human lives and emotions in their innovation activities alongside the use of AI and other new technologies. And we actually expect that designing for people and including emotions should be an advantage for them and could cause them an uptake in the technologies and the solutions that they're providing. hopefully.
I think from my end, it probably makes sense for me to add something about people's behavior from the anthropology angle. What I actually see is that people's financial behaviors will, in fact, become more complex, even as many tools are simplifying actual processes for people. And what I mean by that is if you look at the way the landscape's changed, it wasn't that long ago that almost everybody was just using their local high street bank, or they were using cash or something like that, something very simple. But in the last, let's say, 15, 20 years especially, we've seen this growth in the number of different kinds of apps for different kinds of purposes, all provided by different kind of providers. And so we have the possibility to do far more complex sort of arrangements in terms of how we combine financial services for different things, both online in terms of apps and offline in terms of advisors. So we could end up with these quite complex landscapes of tools. And we actually see this to a certain extent already in the global south, largely because of the problems I just mentioned earlier. When people run into technological problems or they really need to get something done and there are gaps in services, they find very creative ways to bridge those gaps and to solve problems. They find workarounds. They will do things like if a program they want to use isn't working, they'll transfer money to someone else who they transfer to a third person. There are many different ways people come up with solutions. So people in the global south are used to having to take complex actions to get things done. And what I think is, in fact, this is going to become more common. So what do we do? Well, of course, if we want to understand complexity, there are many things we can do. From our end, again, we champion the idea that we need to go and talk to people in person. And specifically, what that means for organizations is that they need to think more about the ways in which they do research and think more broadly. So you might have a company that already has a great department in-house doing user experience testing, for example. They may also hire external people, and they may also actually listen to their own employees who have contact with customers to learn about how customers are changing. Now, I think that could be broadened out to include a greater range of methods. There are many more research methods developing these days. And also, it needs to be a little bit institutionalized in companies. So one thing I've heard UX researchers complain about is that often research is the last people think of to do. It's like, okay, we want to develop this fantastic product. Excellent. It's nearly ready. Hang on a minute. Are people actually going to like it? Maybe we should have thought about this earlier. And then they send the researchers out to find out whether people like it or not. And sometimes the answers they get are not favorable. So what organizations we feel need to do is to think about research far earlier in the process, have a research strategy across the company, and implement research at beginning stages of development so that it can they can have time for that to come to better fruition. I guess those would be my big tips for the future and how to cope with it.
I like that, especially the part that we actually need to talk to people in person and bring that forth earlier. So 2 questions before we wrap up then. First one is, when do I get to meet the 2 of you and talk in person? I would love that. And second of all, and probably most important, how do we find your book?
Well, when do we meet? I don't know. I'll be at FinTech Connect, and probably we'll be back at Finovate next year. It's a bit sparse, but since we are quite a lot far apart, that's sort of sometimes the issue. And I think that we could probably include a picture of the connection to our book. It's Kogan page, and it's available on Amazon as well.
Awesome. Thank you so much. And the book again is called Customer-Centric Innovation in Finance. I'll add the link to the podcast description as well so that people can find that. And to that, thank you so much, Erin and Anette, for joining us today. It's been a pleasure, and I can't wait to read your second book when you're ready, because I love the topic of trust that we were just talking about, and it's very much a human topic. And for the rest of our listeners, thank you so much for joining us for another episode of One Vision. We will talk to you all next week.